Yes, everybody, happy Monday. Happy Monday. I hope you are all doing fantastically well. We are back with another session and we are ready to attack this market. We're ready to break the market down, and we're also ready to analyze and see what we can get out of the market. All right, so super excited to be bringing you some analysis today, and I just hope you get the absolute most out of the session, and ultimately you're able to learn some stuff as well, and I'm able to at least pass some things over to you guys to help you in your day-to-day trading as well. Now, there's a lot of stuff going on around the world, and so I expect or anticipate the market to be quite volatile. So we're going to keep our cool, and we're going to approach the market in the best way possible. But we're going to keep doing what we know to do, which is approach the market the same day, same way, each given day, and essentially make sure that we are applying the rules. It's about keeping to the rules that work. And we're going to do the same thing today, being patient in the market, keeping to the rules, and let's see if we can walk away profitable today. Okay, so here is what we're going to do. We're going to establish, number one, a higher time frame bias. That's my personal approach. This is my I'm bringing you along my personal journey. This is not financial advice. You're not. This is. I can't guarantee you profits. This is me just sharing my personal journey, my personal approach to the market, and bringing you and sharing it with you, hoping it will be of a blessing to you guys. Okay. So we're doing a higher time frame bias first, and then we are essentially going to draw a conclusion. We're going to conclude on where we think New York will trade. All right, this is what we're going to do. Two things we're going to do. We're going to draw a higher time frame bias. I'm going to consider, and then we're going to conclude where we think New York will trade. Now, if we start, I think, on the 12 monthly, in fact, we'll go to the monthly. And if we need to go higher, so I'm going to go to the monthly, right? Does the monthly tell me something? The monthly tells me a lot, actually. So I don't need to go to 12 monthly today. Why? Because I can see that March, look at where March has opened up. March opened up right here. There goes March. There's the open of March. And notice that price has put in a low over here, right? And we currently have the high of the month over here. But notice that this low that was placed over here has tapped into this FVG. So the first thing I can say, looking at this chart, right, is the fact that the monthly, we can see that price has already, from the open of this candle, traded low into this FVG. So I'm going to put in here FVG tap. Okay, these are my signatures. I'm trying to develop a bias here. So I'm gonna put that in there, and then at the end I'm going to conclude what I think price could be doing. Okay. On top of that, naturally a candle should open side to side. But what do we have? We have the market having gapped. So I'm going to put here that price gapped. Okay. Thirdly, I should say, is we are currently trading above the open. So we opened, we've put in the low, right? We've respected the FVG. This is important, right? We've also taken liquidity sweep, previous month low. So the low, that the money that was resting, the stops that were resting above this low, we've swept it. How do I know? Because we've come into this area, taken the low, and then rejected and gone higher again. Okay, so that is pretty much an example here of price action, respecting the FEG and basically not staying in the FEG. Think about it logically, if price wanted to, price would drop into this FEG and then do what? Continue, right? But price hasn't done that. Price came in. What's it done? It's traded back out again. So again, this gives me right? A bullish reading. This is a bullish monthly reading, right? Bullish. So I'm gonna call the monthly time frame with the FEG tap, the gap, and the liquidity sweep of the previous month low, and then lastly is the fact that we're trading above open, trading above. Now, just because I'm saying bullish now, it doesn't mean New York is definitely going to continue bullish. We're just drawing a bias. This is us putting ourselves in a position to be able to put ourselves in a position for a setup. So I'm reading this and it's bullish. We could come 1 o'clock and price could start moving this way, but at least we know that if it is coming this way, most likely it's going to be bearish because it's taken out and it's disrespecting the FEG. So we're just putting ourselves in a good position. But at the moment, the monthly time frame for me is reading bullish. There's the open price. We're trading above the open. We've put the low in already, right? I think there could be a lot of upward trajectory on this. Okay. Weekly. What's the weekly saying? The weekly. Here we go. Here we go. Here's the weekly. So the weekly kind of giving us the same kind of feeling, in the sense that with the weekly, I'm going to consider the fact that really and truly, I'm going to say bullish, more so because we're trading above the open. Trading above open, right? That's the main one. Price has opened up. Yes, we gapped. Price opened. We've put in the low. We're currently trading above the open. There's no guarantee that this is going to go higher, but as it stands at 11:48, this looks like price has already put the low in at the FVG, monthly FVG, and we could be going higher. No guarantees, but we could be going higher. On top of that, guys, if you see this order block over here, you can see that price is actually respecting this order block. Price has not traded beneath this order block. So we can also put in demand zone respect. Okay, we can put that in. So at the moment, that speaks to me to be bullish. Monthly, weekly. We can check the 2-day to see if we can get some more information out of this. Pretty much gives us the same, so I wouldn't really stress too much. I'll go straight to the daily. If we go to the daily time frame, all right, and the daily, essentially, again, what we can see. In fact, can we go back to the weekly? Yes, we can go back to weekly. What I should mention on the weekly is that we've taken previous week low, 2-week low, month low. I mean, we need to mention that previous week low. That's important. Previous week low taken, right? That's important because if price decides to continue, we've got the backing of the fact that price has already taken liquidity to the upside. Therefore, price could drop. So it's important to mark it. Now, if we see price breaking above and going aggressive, then we also know that price has taken the low, but we're trading against it, right? But the fact that we know it's there is important, right? So what I would do is I'd mark these 2 levels: previous week low, and I would also mark the open price, which is sitting right here, right? The open. There's my open price. Right, so this is where price has opened. I think it's important to get that. Perfect. So look at what we're saying here. You've put the low in, you're trading above the open. So this is some type of level for us to go, okay, wow, okay, fair enough. If you now close above these levels and maybe even go above current week high, what I would also put is another line over here, and I'll mark that as current week high. Current week high, right? This tells me that price is put in a low. We know this is the FEG. We know this is an order block that it's respecting. So the low for the week may have already been put in. We don't know. We're just trying to draw a conclusion here. Then we can also know that price, this is the open price, we're trading above the open. Then, secondly, we're coming to the weekly level and there's a current high. If we see price do this, more likely than not, I'm going to be looking to go higher if price presents an opportunity. If again, all ifs, if it does that, if it decides actually, no, we want to continue trading this way, and we wouldn't be wrong to even think that, because we've seen price move bearish. In fact, let's take a pause and actually just talk about the general context of what we've seen in this market. So if I just remove this just for a second, I'll leave that there. But generally speaking, the market had gone, price had gone from higher low to higher high. Okay. And then we've been on this retracement where we've been taking engulfing candles. We put in this high, lower high last week. And this time around, we've come in, we've hit the FVG, right? So prices, rather than break through and close, price has swept this low, which means there's every possibility that price could still be moving bullish. And would that shock me? No, because if you zoom out, just zoom out, price has been moving bullish. We've been moving bullish. So could we be ready to go again? Who knows? But I'm not shooting down the balls. I'm looking at this from a candle perspective. I'm also looking at it from a wider perspective and trying to see how things are moving. Okay. Now, so in light of that, again, New York, we could also see price not push on. But the fact that we know what levels we're dealing with, the open, previous week low, current week high, we're able to kind of trade between these levels and try and figure out what's going on. Okay. For now, snapshot view, this looks bullish to me. We've already come down this level and we've pushed higher. It looks bullish. We don't know if it's definitely going to be, but it looks bullish. All right, so let's keep looking and let's see if the rest of the time frames support the idea. Okay, daily. Here we go. So on the daily now, right? The daily, what do we see? The daily, from a candle formation perspective, we've opened. We're currently trading above the open. Right, we're currently trading above the open. That's the first thing I'm going to say. We've opened, we've put in the low. That low, that's the monthly FVG. This box represents the monthly FVG. This area over here. I don't know if you can see it over there. Let's make it nice and clear. Boom. That's the monthly FVG. This area is what we're dealing with here. So when you go to the daily now, the daily also has within it this wonderful order block that price has tapped right into. So there's the daily order block. So the market has respected, price has respected this order block. All right. So there's your daily order block. And then we're trading above open. So at the moment, I'm arguing that price at the moment, it could change. This could massively change. We're just taking a snapshot view that we're bullish on the basis that price has tapped the order block, trading above open. Okay, order block, respect. Right? What could happen is that when you go to the lower time frames, you could find that price is actually, although we've had this, maybe this Asia-London move, we're not actually breaking through structure. And therefore, price has just had like a little pullback for us to keep going down again. So again, we're going to conclude what we think would happen here. So order block respect plus trading above open. In the next hour or so, price might not be trading above the open. We might see price trading below the open. So it could change everything. But again, us knowing where we are at least gives us an opportunity to adjust where needs be. Okay, order block respect, trading above open. Okay, so at the moment, I'm saying that this day has been bullish. The question is, will it continue to be bullish for New York? At the moment, we can see that price hit this low. We've been bullish. We hit this high. We're kind of pulling back a little bit, but we're still trading above the open. Will New York do that, or will New York do this? And I think the biggest indication will be whether we're breaking through structure and we're seeing good structural breaks. Okay, so let's keep on going, because at the moment, price is going to need to really do something to show us what's going on here. So what do I want to say as well? I do want to acknowledge that we've put that lower high in there, lower low. and price is just kind of, we've just kind of, or the body's beneath it. I mean, we just gapped really. So I want to take us down a time frame to see what's really going on here. Let's go to the 4 hour. Okay, interesting. So look at the 4 hour. Where we've come from on the daily, we've been making, look at that, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Will we respect this supply zone and continue? I think the biggest thing is we're already trading, sell side liquidity has been taken. So if you go to the 4 hour, right, this is really interesting, 4 hour. At the moment, for me, it doesn't feel like structure is supporting the bulls. What I sense from this market is that price has hit some form of support, which is natural. And naturally, you're going to get some type of rejection. But this rejection is not causing a break of structure. We're not seeing the London move cause that break. Not saying it won't do it. We're just not seeing it yet. All right. So for me, I'm looking at this and I'm saying the 4 hour at the moment, you can even see that the last break of structure was a close of this level here. So I'm going to say this is actually bearish. I'm going to hold to the idea that potentially bearish because of market structure, but also because, mainly because of market structure, yeah, and lack of bullish break to upside. You see, because of where we are, if we go back to the higher time frame, right? The higher time frame is actually showing us that price is trading back. So yes, we've had this move up, but we're also having this move down. This move up should break through structure if this FVG is a legitimate area where buyers are going to break and continue to move. At the moment, we're not getting that. We're kind of getting tentative, not sure. Let me just get rid of all of this. We're kind of getting a tentative, not sure mentality. Look, this candle represents basically not being sure what direction it wants to move in right now. So if it's not sure on what direction it wants to move in, I am going to go with the prevailing direction. All right. So I'm going to say bearish. We said bearish, right? Bearish. And we said market structure, but also lack of bullish market structure break to market. Yeah, basically that's it. Right. So yes, we've tapped to order block. Yes, we have trading above the open. However, we are not breaking yet. And therefore, the current flow still stays in place until price shows me that it wants to break. So if we go to the 1 hour, for example, what I want to see is if price does something like this, then maybe I can be looking for potential setups to go higher. However, that shows itself, potential setups. But if price, all we've seen is the market drop, react off this bottom, and then just pull back. Price could easily push back the other way. So for me, the bears, although we're saying on the monthly, we've hit this FVG. We said the monthly is bullish, right? Because we hit this FVG. We said the weekly was bullish because we respected this order block and we're trading above the open. And then we said the daily was bullish because we hit this order block and trading. I am not convinced of the bull. Why? Because we're not seeing, after this move, we're not seeing strong moves higher, right? And on top of that, contextually, price has been moving down in this last week or so, a couple of weeks, and therefore there's every reason it could continue going down if it wants to. And if it wants to push the other way and go higher, then it needs to give us some strong movement to the upside, which is not giving us at the moment, okay? So when we look at the 1 hour, for me, for example, I can see right there. So if I go into the 1 hour time frame, I can see 1 hour time frame. I can see that this is potentially, I'm going to say, I say bearish, but let's maybe I should use the word potentially. There's no guarantee, but we do have news at 3 p.m. So price could push through, and therefore this monthly FVG could hold strong. But if price doesn't push through, here's my take on it. Are we bullish or are we bearish? I don't think we can decide yet for New York. I don't think we can decide yet. Why? I think structural breaks will ultimately tell us where to go. We will either go bullish if price, number one, breaks through current day high, current week high. I think we need a break here. If we break through here, then I think there's a potential for us to go higher. If we fail to break through both previous week low and current week high, then price may push this way. And if it does push this way, there's every reason to believe that we could be looking for a move to the downside, right? Now, here's my thought process. What would be actually, I'll leave that extra bit of information out of this. Let's just look at it from a higher time frame perspective, to the 1 hour, to the middle time frame. What do I want to see? The easiest possible move is that price just continues higher, breaks through these levels, and then we just get a move going higher. That's it. That's the easiest level. If the market does something like this, then we're looking for opportunities to go lower as well. So it all depends on how the market moves. If the market moves like this, we're going to look for opportunities to go lower. If it goes higher, then we want to see some nice break through these levels to push this thing higher. So at the moment, I would say that the market for me, GBPUSD, is, you cannot conclude. We are in a good if statement. We're in a good, if it does this, then I'll do that. If it does this, I'll do that. If it does that, I will do this. That's all we're good for at the moment. We don't actually have an idea, which is good. This is where we always want to be. Every time I jump on these calls, I always want to be in the place to be able to say, if it does that, then I do this. If it does this, then I do that. And ultimately that allows us to be positioned to take the right move. So if I look at it from a higher time frame, I would, and I just anticipate the market to continue higher. Could be wrong, all based on what happens with the news. Just because the monthly hit this low, this FVG, it would really take a strong move down. And I think you would have to break current week low, current month low, in order to just to be sure that this is going to be dropping. But generally speaking, the monthly time frame is the head time frame, right? So I'm anticipating that we will see price maybe for today move, but there's nothing to do. We are in a position where we do not have to do anything but wait. Let the market show its hand, and then we can proceed from there. If we allow price to show its hand, then we can proceed from there. Okay. All right, guys, I hope this session has helped. The answer to our bias today is nothing to do for now, because we need to see clearly where price will want to break clear level structural points, right? And therefore the open, the previous week low, and the current week high are very, very important levels as to how price will react at this level. For example, if price gets to this point over here and reacts and pushes down and then trades beneath the open, then you're getting a good indication that we could be pushing lower, right? So it's all these levels are vital for how we are going to maneuver in the market. Okay. All right, guys. Well, that's it for me. Let's see what happens, and hopefully, what I can do is do a review. I'll do a review session either tonight or tomorrow on how this New York session played out in light of the analysis today. All right. Have a good one. Happy Monday, and I'll see you tomorrow. Oh, and please don't forget to like and subscribe. And if you're interested in a more structured teaching, breaking down the charts even more, please do click the link. My school link is in the description, and it will help in terms of taking you deeper into how we enter the trades and how we break this down further to position ourselves for setup. It's all provided in the school link. And if you want that structured trading, please do click on that link and sign up. So yeah, have a good one. Take care, and I'll be back tomorrow. Cheers.